22nd of February, daily levels. So, as I talked about this week, if you remember, options week, options expiry, what happens? We don't go below 50, we stay below 52 until Friday at 8 a.m., which is here, and seems to be tracking nicely now. As everyone panicked yesterday at the lows, I was saying that's probably the bottom, not because I'm a magical, mystical genius, but because I have a bit of fucking common sense. Everybody is. One thing I did observe, though, about this yet again, this move down and everyone getting bearish, it was just like back here. Everyone was getting bearish again. It was just like over here, and it was just like here. People are super fucking sidelined. They're so sidelined. It's hilarious that we're at 52K, and it's so clear that people are sidelined, that they don't have enough crypto or any crypto, or they're even short. You can just tell by the way people are approaching it, because they're bearish at the lows and then they're bullish at the highs. So they're not actually positioned well. You can just see it. I don't know, maybe it's just an experience thing, but I can see it. I definitely can feel that from my Twitter feed, and this is all based off of Twitter. I don't really, I don't use you guys as sentiment so much, because I feel like everyone here is already exposed. You guys are long, or you're getting long, or you have a plan to get long, or you're trading. It doesn't really give much of an insight to me, because a lot of times you're following what I say or what Adam says, or else you have your own systems. But I look online on Twitter predominantly, some YouTube, like, comments and thumbnails and clips. And you can even look on Reddit, or cryptocurrency, a bunch of different places. But the one thing about that, though, is don't try and do it when you're new. I mean, obviously you can look. I'm not going to ban you from looking at a website. But when I went on Twitter first years ago, when I started to watch crypto YouTube years ago, like, it was so fucking confusing, because you don't know you don't know who's good or bad, in air quotes. You don't know who's accurate or who's wrong all the time. And what you realize over time is that that's not that's not true. There's nobody who's right or wrong all the time. There's nobody who's bad all the time. There are people who are like 80% bad, 20% good, and there are people who are maybe 60% good, 40% bad. Meaning that some people are decently right most of the time, or a bit more than average. And there's a bunch of people who are just wrong consistently, but they're never always wrong. Even Jim Cramer's right from time to time. So the point is, I thought this wouldn't be the case, because I've been saying the same thing since 30K. Since the 30K breakout, I've been saying that people seem like they're not long. And just in general, when you hear the way people talk, they're talking about macro collapse and economic doom and stock market. Have you seen how high it's gone? It's so expensive, and aren't we going to have a big pullback before the halving? Hello, what the fuck do you think that was? And all this doomer nonsense. The ETFs are selling news. All the while, Bitcoin is in a tight compression after an impulsive move higher for over a week, with no weakness shown, with three attempts to break below 50, all rejected, meaning support was found, and it's just chilling here. Now, does that mean it goes up only from here? I guess I can't say it does, because I don't have a crystal ball. But every day that ticks by gets us one day closer to the halving. And the halving is the biggest fundamental event in Bitcoin every 4 years. It shifts the supply-demand dynamics permanently. Issuance of BTC will drop from 900 a day to 450 a day. Typically, miners sell Bitcoin, and miners are the ones who get the Bitcoin every day. So currently, give or take, they'll dump 900 Bitcoin per day consistently. It might not sound like much, but it's not nothing, right? And when it drops to 450, that's less than 900, believe it or not. it's not about whether there's a massive reduction. Obviously, previous halvings had bigger reductions, but each time or each halving and each time we go through a 4-year cycle, Bitcoin's price goes higher. And it's really price that matters in terms of the amount of Bitcoin being sold. So before the previous halving, there was 1,800 BTC per day, right? Because it's a halving. If there's 900 now, there used to be 1,800 per day. But that was before 2020, right? And so that was, let's say we went as high as 20, down to 3K, up to 14, down to 3, and up to like 10. Let's say on average, Bitcoin's price was around 8K in that 4-year period. Like, so in dollar terms, between, let's say, 2017 and 2020, Bitcoin probably had an average of about 15 million a day in new issuance, dollars, on average. So it's $15 million of selling by miners, right? Then we had the previous halving, right, which is 2020, which got us to 900 a day, which is where we're currently at. There's 900 Bitcoin per day being mined, but Bitcoin's price is now 52K. So at the moment, that's $46 million. But let's say on average, between last halving and this halving, Bitcoin's price was what? I would say it was probably 30K. So the previous halving was over here, right, when Bitcoin is at 10K. It went all up to 69, down to 30, 69, down to 15, up to 30, and up to 52. I would say on roughly 30K, you could say, right? 30K is pretty much the midpoint of that. So we had 30,000 times those 900 that we're getting every day is 27 million, right? So when people talk about the halving not having an effect, it's just not true. It's just not true. From 2016, 17, 18, 19, 20, let's say, roughly, like I said, $15 million per day of new Bitcoin to be sold. And it is dollars that matter because people have to give their dollars over for the Bitcoin. Because if a miner's selling it, someone's buying it. And they're not buying it with fucking, seashells or fucking pieces of silver. They're buying it with dollars or some fiat currency. So there is more sell pressure per day now than there ever has been. Now, the market's bigger. We have more access. There's more exchanges. There's more volume in general, and there's more participants. So I'm not saying that, obviously the halving does have a diminishing effect because, it's not long since the halving was producing thousands of blocks per day, or thousands of Bitcoin, sorry. But all else being equal, currently there's 45 million of sell pressure, like potential sell pressure, 45 million of new Bitcoin to be sold every day, right? That'll drop to 450 after this halving. And if we stay at 52K, that would drop to 23 million, right? So from 45 down to 22 and a half. It halves, right? And so that is a reduction in one side of supply of what can be sold. They literally cannot sell more than that out of the new Bitcoin. Obviously, old holders can come in and dump. People who've been buying lower can dump. People can always sell, but that was always true. It was always true that people could sell. Long-term holders could sell here and here and here and here. They can sell anywhere. So we are going to have a reduction in potential sell pressure by half every single day in April. April 26th, I think at the moment, is the projected halving date. And when you then combine that with the fact that we now have a new source of demand in the ETFs, which is eating up way more than that every day. If the ETFs had at the moment, certainly, if they had a 25 or 40 million inflow day, that would be considered very low. Because right now, it's anywhere between 100 million to 500 million. Now, that's not going to continue perpetually forever, but it's going to be quite easy for it to stay above the amount that comes from the halving. So, from the last halving to this halving, we had anywhere on average of 15, 20, 25 million of new BTC could be sold every day. Yeah. We didn't have an ETF. We didn't have a consistent, steady, new demand source. Now we do. So think of it this way. You've got a double effect. From 2016 to 2020, there was this amount of Bitcoin being emitted every day, and there was nobody that we knew was buying. Obviously, there's always people buying, but we didn't know there was a definite buyer. So you had 900 BTC per day coming out, they could all be sold. Now we've got dropping to 450 in April, and we know there's new demand, there's buyers there that are going to buy it. So the new supply issuance is reduced and the demand has increased. Supply and demand is law number one. Supply is dropping, new supply, not the total supply. The total supply doesn't drop unless people lose coins or whatever. Total supply is increasing, obviously, because that's what the mining is doing. But the new supply issuance is decreasing. Demand is increasing. That makes price, all else being equal, go up. And that's why we're seeing such strength. And can we go down here? Of course. Will we go down here before the halving? I'm less and less inclined to even think that we go there. Maybe 48k. I'd love to see 48k to hit that pivot, right? I'd like to see it, but there's no signs of it yet. Now, the big thing for me is this looks great, this is strong, but as I said, this is based on options, and I've talked about this not just this week. I've talked about this for 3 months now. Talked about it in December, January, and now February. And you saw how it played in December. We stayed between 40 and 45. You saw how it played in January, where we stayed below 42k going into the expiry. And as soon as the expiry happened, right, if you remember that, if we go back on the 1 hour chart, we go and look at the January expiry. If you remember, when I traded this, it was part of trade of the day, and we had, where the fuck are we? I'm just going to the 1 hour chart over here, all the way back down here, all the way back in the past, ages ago. What the fuck? Oh, that's 1 minute. I wonder why I picked. What am I doing? There we go. So it was down here, Friday, 26th of January. The options expiry on Deribit, which is the biggest options platform, is 8 a.m. There's 8 a.m. there. Here is the 8 a.m. options expiry for Bitcoin, right? We were at 40 to 41k. 40.5, sorry. Within 1, 2, 3, 4, 5, 6, within about 6, 7, 8. Within about 8 hours, so the Friday session, we hit 42. And it was just a straight line up because price was pinned below that level and around that 40k level for the options expiry. It's just how it tends to happen, because the closer you get the options expiry, it's not magic. The closer you get to it, the less incentive there is for somebody to push it beyond that. Because if someone was to push Bitcoin below 50k before 8 a.m. tomorrow, which is not far away, that's only here, right? That's there. For someone to actually push Bitcoin down below 50 before then would require massive effort, and it would put a huge amount of people into a loss, because there's a lot, like the highest open interest is at 50k. So the most number of positions, contracts, are in profit above 50. There's been 1, 2, 3, and really 4 attempts to break below 50, which have all failed. And so that is not happening right now. The market is telling you that's not happening. Now, after the options expiry, so after 8 a.m. tomorrow, which will be an interesting time to take a look at, anything could happen. Because right now, there's an incentive for people to buy this 50.5, 50.6, 50.7. Because again, they have positions to protect. After tomorrow, when we hit the options expiry, there's not so much incentive anymore. If we're here and the options expiry happens, we could easily just whip back down, take a look below 50, and maybe pop back up for all those people that are betting on 50 not getting touched. That could happen. I think, this is just my one of my paths, I think if we do that, I think that it will get bought up heavily. And as soon as we go below 50, it will spend a little bit of time below 50, but it will reclaim, and then we'll move on from there. I also think the same thing happens to a slightly lesser degree, but it's definitely real, that 52k is acting as resistance. And that's exactly where we are right now. And that's because when you look at the options, those are the 2 key levels. And when you're trapped between 2 key levels that have a high level of OI, so there you go, 50k, there's a total of 175 calls and 143 of puts. So that's 170, 140, that's 2, that's 3, about 310, 320 million. The next one is 52, which is 117 and 92. So that's about 210 million. Those are clearly the two. You can see them. If you just look, they are the two biggest cumulative levels that we are in, and we're stuck in the middle. So I wouldn't be surprised if we stay below 52. I wouldn't be surprised if we go above 52 because it's not as big of a wall as 50. But 50 is clearly support until 8 a.m. tomorrow. After that, who knows? My expectation for today is that we fall back below. We probably flush down into there, and we just do something like that. I think we just continue to compress or chop sideways. Once the OPEX happens, then the directional move will be able to begin. Maybe not right away. Like last month we did. Last month we had the Friday move, which we could see that, a breakout higher. And I think that will happen. I'll explain why in a second. I think we'll actually go up and take out the highs. But we could also equally go down and take out the lows. It all depends on the positioning, right? Are people too long? Is there too much leverage built up? Is there too many people positioned for the long side expecting a big move up? Or is the opposite happening? Have too many people de-risked again down into this level, which I 100% saw people doing, and on Twitter talking about how it's, oh, be careful, de-risk, don't want to have Bitcoin here. They're all just operating from the same fear perspective that fucks people up in every early bull. So back to the chart over here that I've drawn a couple of days ago. The blue path is what we've got, right? So blue path, I said we'd broadly just chop around sideways until the options expiry. That's why I drew it exactly like this. This path was drawn to just drift around until when? Friday, 8 a.m. Then we move up, and then we could break out. I think that'll happen. I'm not saying it's definitely going to happen. We could go down, but I lean towards upside. I wouldn't be surprised if we do test 50 before we move up, but equally, I wouldn't be surprised if we totally front run 50. Because like I said a couple of weeks ago when we hit 50, that I don't believe 50K is resistance. I believe 50K is the level where people look at it and say, wait a minute, Bitcoin hit 50K, closed a weekly candle above 50K. That opens up all-time high. That means, why would I sell my BTC at 50 when the halving's coming up, when everything's positive, the incentive is there, the ETFs are bullish, the flows are coming in, we're in a bull market. I just don't see why spot sellers would dump their Bitcoin now. Low time frame, leverage traders can always get wrecked. But as I look around, I see people waiting for that constantly. Like, dips coming, 44, 46. Maybe, but I'm chilling here in spot. And when you're in spot and you're in spot from lower and you're holding, you can look at it a bit more objectively. If it goes down, great. I'd love to long more. I'd love to buy more, but I just don't see why it would need to happen. We can have a pullback from higher. We could go, because remember, the halving is April, right? We could go up towards all-time highs going into the halving and then have our post-halving dump all the way down to the 40s and then go again into 2025 for the all-time high breakout. Like, that can happen. And all the people who are waiting for this 45, they could get it. But it could be up first, then down, then accumulate, then back up. So, as I see it, day by day, it's moving exactly like I would expect it to move in a options expiry week. After tomorrow, we'll see where the directional move comes. I tend to think that we will go up. I don't know that for certain, but it's probably the higher probability out of the different paths that I've got in mind. And so we'll see what happens from there. The main reason as well is just from a technical perspective, we came down and touched the 12 EMA. It looks like it didn't touch it on some of the exchanges, but it did on others. Depends on which exchange it is and where the wicks went to, right? Bybit, it touched it. Binance Spot, it didn't. Binance Perps, it did. And Coinbase, the four big ones. Coinbase, it didn't. So look, you can call that a touch. Basically, right? It touched it on several exchanges, didn't quite touch it on others. That's a sign for me, that's a touch. When price in a strong uptrend touches the daily bands for the first time, it tends to produce a new high. If it produces a new high from here, take all this stuff from the lesson yesterday or from the one of my live streams. When it touches that, my expectation is that it makes a new high. Now, will it just go up, hit that, and then go lower? It could. But the expectation for me is that it does take the highs once it holds that band. And typically it will actually go further, right? It will make new highs and continue to go higher. So I'm waiting to see what happens tomorrow, of course. In terms of trading, I'm bullish, remain bullish. Nothing has changed there. So I'll take a quick look at ETH. And then in trade of the day, I'll look at AI because we've got a bunch of AI coins pushing towards their all-time highs, Render and Fetch specifically. But ETH is doing well. ETH's leading. Nothing really to say here other than I think ETH is finally having its moment. And if you're looking just from a liquidity perspective, the next big liquidity level for ETH is up there, 35.80. There doesn't seem to be a huge amount of resistance in between there and here. And again, it's going to go up to the point where people think it can't go up anymore, or what do they think? Sorry, they think it can't go down and then it'll pull back. But ETH hasn't exactly performed well, right? It's gone up, but people have been like angry for some reason because ETH is not like pumping. Then it starts to pump and immediately like, oh, fuck it, it's going to fade, it's going to crash. Well, no, I just think it's time for ETH to build up a bit of momentum. We look at ETH BTC, finally showing some life. My main, as I said, I want to see some actual genuine strength from ETH, which would be a weekly close above here. Why? Because that's the swing high that we're currently in. If we close above the dotted line on a weekly, that would be a sign that ETH is now finally, for the first time in fucking nearly 3 years, it's actually making a low, a high, a higher low, and then a higher high. So it would have to actually do that. If ETH comes up here, whatever dip comes next would be the place to get into ETH for me, because that would also make the weekly bands flip green, which is another sign you need to see for an uptrend. And at that point, I could see ETH having a sustained run to the highs. And I think from there, that's when ETH actually rejects. I don't think ETH goes anything above here, but I think there'd be a nice ETH run, probably post-halving. Once Bitcoin's halving's out of the way, ETH BTC continues to strengthen. We move towards the ETH ETFs. ETH has more fundamental catalysts coming up that would also help it. And that would be where I'm looking at next. So all looks good. Our funding rate's slightly high, sure. Are they dangerously high? I wouldn't really say so. I would say any dips that we've seen, like when Bitcoin has had its funding rate spike up a little bit, dips down into the lows towards 50 have reset it. For altcoins, same thing. And I'll just look at alts themselves. So BTC funding is 0.018, so it's above neutral. But we saw that whenever Bitcoin was pushing back down towards the 50 level, it would go back to neutral, back towards even at 51.5, back to neutral. So I'm confident that if we had some downside and Bitcoin went to 50 or 49 or 48, funding would drop way off. People would get bearish again. They would start shorting, and we would be able to set up a nice bottom and bounce. Same for alts. Yes, funding slightly elevated. It's not crazy, right? And high funding can persist and take prices higher to new levels, and then it can sell off. Funding, again, it is not a sign of longs and shorts that you need to immediately fade everything and start dumping your bags. You're going, like, if you don't, how will I say this? Funding rate, okay? The funding rate is going to be positive for the next fucking 2 years or however long the bull market lasts. That is a feature, not a bug. Let me go back here and just put it on and show. Whether it goes extreme like last cycle, and it went extreme last cycle. It went crazy extreme. Where we had months where it was above 0.05, 06, fucking 0.15, which is 15 times higher than average, right, than neutral. Compare that to now. We're so much lower in terms of funding. Open interest is not at all-time highs, although we do have to account for CME futures, which are up as well. However, it is a feature of a bull market that we have positive funding rates, okay? And that is totally normal. Now, when it gets too extreme, you're going to see a shakeout and a flush. That's normal. Anything that goes too high will come back down. It will mean revert. But yeah, I'm not worried. at this point. I'm also not max degen long. I'm spot long all my bags, and I will add long leverage trades on top of it if I see a setup. But like, the only people that are freaking out about this are people that are over leveraged or underexposed, right? People who don't own Ethereum from 2K, or don't own Bitcoin from 20K or 15 or 23 or 30. It's people who are sidelined. I wish I didn't just disappear and fuck off for 2 years. I wish I actually stuck around. Now they don't know how to get in because he's at 3,000. So what do? They FOMO it and long on leverage, and then they put themselves at risk of a short-term shakeout. It's only the people that are badly positioned who are panicking. Everyone else, all of us, anyone who's been in the campus for a year or two, everyone here who's got spot, we're all just chilling, watching our bags go up. And when the opportunity comes, if we get deeper corrections, we're ready to buy. We can buy because our entries are protected because we actually stuck around during the bear market and bought. So, yeah, I mean, ETH itself, from a funding rate perspective, just look at it. It's absolutely nothing even remotely close to its previous euphoric phases where it was super high. It's really just coming off of the lows of neutral. And, the same thing again, if the Bitcoin ETF is a success, which it undoubtedly is, it's the biggest ETF launch in history. I don't know how that can be more of a success. People are going to look at the ETH one and say, wow, well, let's run it back for ETH. So, yeah, dips are for buying. The bigger the dip, the better. It doesn't mean you FOMO in here, but I think people who are waiting for these super massive deep corrections are just going to be left waiting. And we will have some kind of correction pre or post halving. I would lean towards post halving or just right before it. But I don't think that a big 30% correction, which is what everyone's really fearing, like 10%, sure, but 10% is not 10% is a dip, right? 10% is not a fucking panic, fucking, you're getting shaken out, you're getting wrecked. Like a 10% dip would just be a normal, healthy dip. 10% there. Takes us to 48, basically. Totally normal. It's 30% that we will get at some point. And do I think 30% comes from here and takes us all the way back below the post ETF selling lows and takes us to 37 and breaks all structure? No, I just don't see it. I just don't see that. So what I do see is potential for maybe a quick dip down, then we go higher towards all-time high, and then could you have a 30% dip post-halving? Absolutely. That would take us back down into this area. And you could see all of this where it dips down, forms a new low, and away it goes. Like, that can happen. I mean, obviously anything can happen, but there just doesn't seem to be the willing spot sellers to send us 30% down. You have to have willing spot sellers to send us that low. We've seen this. Even with willing spot sellers after the ETF, it went 22%. To go 30%, there has to be something. Like, there has to be some major FUD. There has to be some major bearish impulse, whether the Fed decide not to cut rates or whatever. And I don't see any of that coming just yet. So for me, it's going to, I'd say it'll go sideways for the rest of the day, between 50 and 52, and we'll reassess after the after the OPEX tomorrow. That's it. GM, GM, GM.